Whenever a society or a trust goes for major repairs in its premises, the vendors charge them 18% GST. And then the committee faces a question whether we should take this burden of 18% or not. So for understanding this, one must understand that GST is a consumption-based tax. What it means is, whenever you go out in a restaurant and have your food, you pay GST. If you buy a mobile phone, you are paying GST. If you buy something online and that material comes to your home, you are paying GST. So the concept is, if you are the ultimate consumer of a product or a service, you are supposed to bear the burden of the GST. Similarly, if you are doing a renovation in your house, the GST charged on all the plies, materials, marbles, cement, and any other material will be borne by you. So the similar is the case with a society or a trust. Since the society or the trust is the ultimate consumer of that innovation or a major repairs service, the entire burden of that GST will be borne by you. The only difference is, if you are a registered society or a trust, you might be eligible to take the credit, that is, take the input tax credit of that service, and then you might be able to pass on the burden to your customers or your members. In a society, if you're charging more than 7,500 per member per flat, then you can charge the GST, and if it is below 7,500, then it is exempt from GST. However, one must note that even though you are eligible to take the credit, the GST input tax credit is specifically blocked under section 17(5) of the CGST Act on the works contract service. That means if you are doing any major repairs which are capital in nature, like renovation of the entire building, reconstruction of a part of a building, or construction of a new lift in the society, the input tax credit on such services is specifically blocked if these assets are going to get capitalized in your books of accounts. That means if you are going to record these newly created assets in your balance sheet under the asset side, then you will not be eligible to take the input tax credit of the same. Furthermore, you must also know that if you are a society and if your outward supply is consisting of two kinds of supplies, that is, for members whose maintenance is more than 7,500 is taxable, and for members whose maintenance is less than 7,500 is exempt, then you are also required to reverse the ITC in proportion to the taxable and exempt supplies. So it is always advisable that if you are undertaking major repairs in your society which are going to be capital in nature, that is, it is going to create a new asset for you, then you must consult a tax advisor before you go ahead with such projects. One must also note that the regular repairs and maintenance services or the AMC services which the society procures from its vendors, society is eligible to take the input tax credit of the same, subject to reversal of ITC under Rule 42 or 43 in the proportion of taxable and exempt supplies as discussed earlier.